Hi, everyone. Welcome to the eighth and final session of Restart Ukraine webinar series. And today we're really excited to be joined by David Horn. And what I'll do is pass it over to him and he can introduce himself.
Terrific. Thank you very much, Daniel. Hi, everyone. My name's David Horn. I am a chartered accountant by training. For the last 20 years, I've worked in the SME area. I've been the CFO of a couple of companies listed on the London Stock Exchange. And over my career, I've raised more than £110 million in debt and equity funding for businesses, and I've bought or sold more than 25 companies. For the last 15 years, I've been doing that for my own business. So I run two businesses, and I've written two books, one about each one. So my first book is called Add Then Multiply, and it's all about how small businesses can use the skills that I learned working for listed companies in terms of raising funding and scaling up through buying other companies. So it's a sort of an advanced strategy for growth. And as a result of that book being published, I started to get invited to speak at events. And I was speaking at an event about 4 years ago about fundraising. And after my talk, a woman came up and asked me why so little funding went to female founders. And I looked at her and I said, I have no idea, but I'll find out. And I have to tell you that that's been a life-changing question. I created a social enterprise called Funding Focus, and we've run a series of events, both live and online. We've attracted a global audience of well over 1,000 female founders from 66 countries around the world. I gave a TEDx talk a few years ago called The Fight for Fairer Funding. And last summer, it got picked up by a couple of YouTube influencers, and it's now approaching 3 million views. So that's pretty cool. And also last summer, I published my second book, which is called Funded Female Founders. And it's content from that book, which I was sharing in the video. And I guess the last piece of news is that linked to that work that I'm doing, I am in process of launching an investment fund that will invest in companies founded by women and also people from non-white ethnic backgrounds, because they face a similar uneven playing field compared to most of the men who are raising capital to grow their companies. So in a nutshell, that's me.
Great, thank you so much. And what I'll do is I'll share my screen and then we can do the video, and then we can expand on it and then do a Q&A. So let me know when you can see my screen. Yeah. And everyone can hear the audio?
Hi, my name.
Yes.
Yeah. Okay.
Yeah, we can see. Mm-hmm.
Hi, my name is David Horn. I'm the founder of Funding Focus and the author of Funded Female Founders. And today I'd like to talk to you about two key things: pitching and your pitch deck. So we'll start with pitching, because I find many entrepreneurs don't really understand what pitching is all about. They often think, I've got to get everything across, when in fact, pitching is a process. Pitching is going to be a series of meetings and events. And when you're looking to raise capital for your business, it's not going to all come about from a single meeting or pitch. It's going to happen from a series of events. So let's just look at that for a moment. The first meeting that you're going to have with an investor is all about assessing fit. Do I like you? Do you like me? Do we think we could work together? Do I think you've got what it takes to build a business? Do you think I've got what it takes to support you as an investor? And it's really, really important for you as the founder of the business, as the entrepreneur, to assess the investor just as much as the investor is trying to assess you, because it's a relationship and it will become a very close relationship over an extended period of time. So it's really, really important that you take your time
and make sure that it's a relationship. So if we look at pitching, typically what will happen is once you get through the vetting process or the selection process and you're invited to an actual pitch, the goal of that first pitch is to be invited back to the second pitch. And during that first most importantly, you want to get across that this is who you are, and you want to assess who they are, and you want to make sure that you can work with those. That is absolutely and utterly critical to the process, because the worst thing that can happen will be that you get into a relationship with an investor and it turns bad, because as human beings, you don't get along. So it's really important in that first meeting for both of you, yourself as the founder and as the investor, to take that time and assess, is this someone I want to do business with? Once that stage of the pitch is over, if it's gone well, then you'll be invited back to do another pitch. And that next pitch might be a very specific, let's focus on your technology, or it might be, let's look more deeply into your market, or it might be, let's have a broader assessment of your competitive environment. Any of many things. And you'll be able to prepare for that, because once you get through the first pitch and get invited back, they'll tell you what they want to cover. So please always think of pitching as a process. And each time you have a pitch, your goal is to get invited back to the next pitch. And once you've been through 3 or 4 or 5, and there might be more, you never know.
Lost the sound, Daniel.
Yes, yes, I also can hear.
Oh, sorry, there, can you hear now?
But please don't go into a pitch thinking you've got to sell them on everything from that first meeting. That's not the goal. The goal of the first meeting is to establish fit, to see if there's a relationship, to see if it's worth taking it forward. I hope that's clear. Now let's come onto your pitch deck. And again, I'm going to address this from the perspective of this is your first pitch. This is the first one you're going into. You're assessing the fit, but you've got to give them some information around your business, because that's all part of the whole package. And in my book, Funded Female Founders, there's a section all about pitching and pitch decks. And on the pitch deck section, I recommend that you have 12 slides, no more. I've seen far too many entrepreneurs who pull together a slide deck that has 18, 25, 30, sometimes more slides. You don't need that for your first investment pitch. You need 12 slides. Let's just go through what. Number 1 is your cover slide. That simply gives the name of your business, says that it's an investment pitch, and I always recommend that you have some kind of an attractive image. Make it something that looks appealing. Okay? So that's your cover slide. Your next slide is your elevator pitch. This is something that in 30 seconds or less, you can get the message across to the investor. Why should you be looking at this? Why is this important? What is this? And why should I spend time looking at it? Because the reality is, many, many investors get hundreds or thousands of pitch decks every year. And most of them make a handful of investments. Less than 1% of the pitch decks that come in lead to investment. So you don't get a lot of time initially. And so it's really important that you have a good, clear, concise elevator pitch that lets the investor look at that first slide or second slide and say, ah, I want to learn more. So a really tight elevator pitch. The next slide, and this might surprise you, is to put in the team, especially if you're dealing with an early stage business. Because the reality is, with an early stage business, it's all about the team. It's about you as the founder and your core group of people. Who are these people? What's their skill set? What's their background? Can I work with them as an investor? So really take some time and put your team right up front. I've seen far too many decks where the team is right at the back of the deck, almost as if it were an appendix. For early stage businesses, more than anything else, an investor is investing in the team. So put it right up front. Next up, the problem. What is the problem? In simple terms, don't get overly complicated. Remember, for a first pitch deck, you're presenting this at a reasonably high level. You want to get the core information across, but you don't need to bury them with all the detail. So what is the problem that the customer faces? Give a couple of examples. The next slide, logically, is the solution. What is it that you are doing to address the problems that your customer has? What is your technology, or what is your solution, or what is your idea, or how are you solving the problem that your customer faces? Again, keep it simple. If you've given a couple of examples on the problem page, answer how you're going to solve them on the solution page. Don't overdo it. Don't get too technical. Just keep it simple. Problem, solution. Next up, and this is a really important slide, is traction. What kind of traction do you have? If you're a pre-product, pre-revenue business, you won't have any revenue or activities or customers, but maybe you've got some information from surveys you've done or research you've done to your customers, something numeric that you can show. If you've got a product, even if it's just an MVP, how many people have signed up to it? How many people have signed up to a free trial? How many people are looking at using it? If you're actually delivering revenue, how many customers have you got? What's the revenue that you're getting from them? What was your your most recent month's revenue? Give them some statistics and some information based on where you're at today that demonstrates the traction that shows that people really do want the solution that you're offering. That's absolutely critical. Once you've addressed traction, you then move on and look at your target market. And your target market, when you're presenting to an investor, is broken down into three component pieces. They're called TAM, SAM, and SOM. TAM is the total addressable market. SAM is the serviceable addressable market. And SOM is the serviceable obtainable. So total addressable market could be the whole country where you are. It could potentially, if you're a software-based solution, could be the whole world potentially. Or it might be, if you're a physical business, it might be your local city that you operate in. You know, whatever you think is the maximum market that you can get, that's your TAM, your total addressable market. Your SAM, serviceable addressable market, is of that total market, how many people are there that are actually potentially customers of my business? So again, you look at whatever your total market is, and you take a chunk of that, and in reality, it's unlikely to be more than 10 to 20% of the total addressable market is your serviceable addressable market. But really focus on who are the kinds of people that you would actually really be going after, because you can't get the whole world. I mean, even Facebook doesn't have the whole world. So what you want to do is focus on who can I serve? And then once you have your SAM, your serviceable addressable market, then you want to identify what is your serviceable obtainable market. So out of your SAM, how many of those people realistically could you sign up and have be customers of your business? And so TAM is like that, and SAM is like that, and SOM is like that. And it's always got to be in that kind of a relationship. Don't be concerned about making it too small, because if you're going after investment, you want to show the potential that your business can be really big. But equally, don't go out there and say, my total addressable market is the entirety of humanity, because an investor is not going to believe you. So put a little time and effort and thinking into realistically, what is your total addressable market? What is your serviceable addressable market? And what is your serviceable obtainable market? TAM, SAM, and SOM. That's a really important slide for you to be able to talk to and have a Q&A session with an investor about. Next slide. Who's your competition? Now, I sometimes come across entrepreneurs who say, well, I don't really have any competition. And from an investor's perspective, that's not a good thing. Unless you've got something that is absolutely 100% unique and totally unlike anything else out there in the world. And that doesn't happen very often. You've got to be able to identify who are some competitors. They might be close competitors, they might be slightly wider competitors, but I would very, very strongly recommend that you set out, here's my competition. Here's 1, 2, 3, 5 of them. Not more than that, you don't need it. But here's a bunch of people who are competitors. And you can almost put it in a table where you say, here are 10 features. And of these 5 competitors, these ones have this many and these ones don't. And here's me, and bang, look, I have all of them. And that's the kind of a layout that you want to be presenting. But don't be afraid to show that there is competition in the market, because that makes investors more comfortable knowing that there are other people out there trying to achieve the same thing. Once you've got that out of the way, I then recommend you put together some financials. Now, in terms of what goes into your pitch deck, this can be quite high level. Typically, what I would present is over a 5-year period. So your current year and the next 4, looking forward, you want to have your total revenue, your total expenses, and your EBITDA. And don't be worried if it's showing a loss in the first couple of years, but you want to make sure that it turns up and turns positive as you go through that period of time, so that the investor can very clearly see that over a reasonable time horizon, this business is going to be growing and making good profitability. And that's really important. And I would also put a cash balance in there so that it's very clear what that works. Now, behind all of that, I very strongly recommend that you have a good financial model. Make sure you work with someone who's done modeling before, but have a good financial model that sets out your profit and loss, your balance sheet, and your cash flow, ideally on a month-by-month basis for a 5-year period. Because if you're serious about seeking investments, as you get further down the road of the discussions with the investors, they're going to want to drill into your financial numbers. So you might as well have them ready up front. But for the purposes of this first pitch deck, you just need those few numbers. Over 5 years, revenue, expenses, EBITDA, and cash. Next slide is the investment ask and the exit plan. How much money do you want? And be very clear how much money you want. Make it very clear to the investor. I want 2.6 million, or whatever your number is. And then set out how you're going to achieve your exit. So I will have the 2.6 million to invest in my business, and we're going to achieve an exit in 5 years' time through a trade sale to one of these big players in my industry, or through an IPO because someone in my team has experience of doing an IPO, or whatever your exit plan is. But set out clearly how much money you're looking for, and then what is your exit plan, so that the investor can see that you've thought that through. Next slide, use of funds. What are you going to spend the money on? And I often do this graphically. You can use a pie chart, you can use a bar chart, you can set out figures, but try and make it visually attractive. What is the money going to be spent on? How much are you going to spend on people? How much are you going to spend on product design? How much are you going to spend on marketing? How much are you going to spend on what other activities that you need to spend the money on? Be very clear so that the investor can see that you've thought this through carefully, and you know when you say, I need 2.6 million, and here's what I'm going to spend it on, then the investor knows you've really thought it through. It's a really, really important piece of thing. And don't be afraid to ask for what might seem to you to be a big number. If your business can justify it, and you find the right investor, you can sort that out. So don't be afraid to put in a big number. And finally, on the last page, just say thank you and put your contact details. Your name, your mobile number, your email address, your website. That's it. So in a very quick overview, that's pitching, and that's your first pitch deck. My name is David Horn. I'm the founder of Funding Focus and the author of Funded Female Founders, and I wish you the very best of luck in your fundraising journey. Thanks a lot. Bye-bye.
Great. Thank you so much for sharing that with us, David. So I
Pleasure.
thought now would be a good time to either we can start with some questions and open up the discussion, or if there's any particular points you would like to expand on first, then we can go ahead with that.
I think I mean, as long as everybody was able to follow it, there were a couple of points where the audio went a bit funny, but if everyone was able to follow it, and then I'd be very happy to just answer, whatever questions they have. I'm happy to expand on anything of what I discussed, but let's let our audience decide what they want to learn more of.
Yeah, actually, I can start. For me, it was very informative, so I made a lot of notes. Yeah, it's like very good to have this plan. I'm just have small question about because I have now I am at the MVP stage, so I have only like a clickable prototype of my application. So I'm just wonder what would be the best time to seek for investment. I mean, because as for now, I don't have any profit, and would it be better to wait some period of time to do it like from my own budget and to start applying for funds when I have some clients? I mean, do you have any statistic what is like because I've heard that investors invest more when they see some business that's doing, yeah.
There's no question investors will invest more and at a higher valuation when you actually have clients, because then if you think about it, it's a risk reward trade-off. So there are some early stage investors that will invest at MVP pre-revenue, but they will exact their price in order to do that. So they will set a lower valuation on your company. So for whatever amount of money that they put in, they will get a bigger stake than they might if you were waiting until it was down the line. So really, there's a couple of threads from what you'd said. Number one, when should you go out and seek? There's no harm in starting to go out and have conversations with people. Reach out, let them know if you're at an event and you meet an investor. Ask to meet with them for a cup of coffee and have a chat and take them through your thing. And even if they say, look, this is too early for me, if they're interested, they might say, well, look, Valentina, this is too early for me, but I love the idea of your product. When you have some customers, come back to me and let's talk. So there's no harm going out now and talking to people. And if they're interested, they'll let you know either, hey, this is great, let's have a conversation, let's go more, or they'll say, this is great, but it's too early for me, and come back. In terms of, I guess, the other side of things is, how long can you fund the project yourself? What is your own personal cash flow situation? You could, in addition to bootstrapping, you can raise money from friends and family. And a lot of founders find that difficult. They think, oh, well, I don't want to go out and ask my friends or my mom and dad or my aunt and uncle. But actually, those are the people who know you and love you the most. And if you can position it in your own head to say, I am offering these people an opportunity to make an investment. This is not charity. This is not me going out saying, please give me money, and I don't know what's going to happen. You are selling them a stake in your company. And there have been many, many cases of companies that have gone on to be huge companies. Even Richard Branson started out with a loan of £5,000 from one of his uncles.
Yes, and it's a good point, but unfortunately now all of my friends and my family away from Ukraine, and they are like facing some rough times. But anyway, it's a good suggestion.
You're facing rough times in Ukraine as well, so I think I have tremendous support for what you guys are dealing with right now.
Yeah. Anyway, it's good suggestions. Yeah. Thank you very much.
So I mean, the other things you might look at, and again, I don't know what's happening on the ground in Ukraine. I'm sure most of the resources of Ukraine are focused on the war, but there may well be some government initiatives to support entrepreneurship in certain sectors or fields. I know in more developed countries, there are often government grant programs where they're trying to promote in a certain area of development, or it might be a certain geographic region. But obviously situations are different in your country. You could also, if you wanted, look at borrowing money. Typically, as an early stage company, you won't get a loan into the company, but you might be able to get a personal loan that would give you some cash flow to put into the business. But of course, you still have to pay that back. And if it's a personal loan, then it's your name that's
Yes.
on the document. So that can be a little riskier. So I generally advise founders that are at your stage, if you've got an MVP and you're starting to show traction, so you've got people who are saying, hey, this is great, and you might go up and I don't know what your plan is to price it, but let's say for argument's sake, you're going to price your MVP at $100 a month. Well, maybe for your first 10 customers, tell them, here's a special deal and you can have it for $10 a month, just so you can get 10 people signed up. Because once you've got that, then you can go to an investor and say, hey, I've got my first 10 customers.
Yes. Thanks. Good. And my second question is like about the team. So as you mentioned that it's important to have a team. What if, I don't have a big team, or can you suggest maybe any resources or any groups where I can join and find some people who can join maybe you know these communities?
I don't know the communities in Ukraine. So who is in your team?
It's only 2 people. It's me and UI UX designer. So it's like 2 person. Okay.
So you've got a team. There's 2 of you.
Yeah.
Who's built the MVP?
Actually, we just built in Figma, so it's like clickable prototype. So now we are looking for some developer who can join our team.
Okay, great. So if you're looking for developers, I know, and again, I don't know based on the current situation, but I know there are lots of developers, freelance developers operating out of Ukraine. I have clients that have done a huge amount of work with developers in Ukraine. So, maybe there's a LinkedIn group for developers in Ukraine. Maybe you can go to a local networking meeting or a meeting for entrepreneurs. Maybe you can go to whereabouts do you live?
Now I'm based in Spain, near Malaga.
Okay. So why don't you go and find out where the local universities are, and go and hang out at the universities, and just go into where the students are hanging out and having coffee, and just listen to conversations and see if you can meet people. I know some people who found some very successful people by just going and hanging out where the kind of people they want hang out.
Yeah, it's a good idea. Thank you. Yeah, I understand. Yeah. Okay. Thank you, Wes. Thank you so much.
My pleasure.
Thank you.
Okay, I have a couple of questions, if you
Great.
Don't mind.
Of course.
Oh my God, I have big questions and small questions. I will start with the big ones.
Okay.
I want your advice, like, how do you choose investor? Like, for example, because I understand what investors want. They want like a great team, great product, great financial forecast, and all this stuff. It's obvious, it's clear that you said to make it in a short pitch deck. But from other side, what we should pay attention on when going and pitching to whom? Because having an investor, it's not just you are getting free money, you are getting partner, and partners, it's like I have really bad experience with partnership, and for me it's like I have to think like 5 times to understand what criteria you would advise to look at the first side, not only money, because everyone has money.
So first of all, it's not free money. It's absolutely not free money.
Of course.
These are people who are going to have a significant ownership stake in your business, depending on the stage that you're at and the type of investor they are. assuming you own 100% of your company now and you go out, you might end up selling a 30% stake in the company. So they're going to be a sizable investor. They're going to have a seat on the board of directors. There's going to be an investment agreement that sets out the rules of how do we operate moving forward? What are you allowed to do without having to come back to your investor for approval? What do you have to do? If there's certain things, you have to go to your investor for approval. So one of the things that will often happen will be you'll create an annual budget. And as long as things are within the budget, you don't have to go back to the investor for approval. But if there's anything outside the scope of the budget that you want to do, you have to go for approval. So that's one thing. In terms of how to find them and how to find the right ones, what I often recommend people do is and you can do Google searches, and you can go onto websites like Crunchbase or Angel.co. Those are both free. You can also have a paid for version that I think costs maybe $100 or $200. So it's not a huge amount of money. They will allow you to put in slightly more sophisticated search criteria. So you can say, what does your business do?
I have like a fashion brand, women's wear.
Okay, great. So you can go in and you can say, I'm looking for investors who are interested in a fashion brand at an early stage or whatever. You mentioned you've got your pop-up shop now, so you've hopefully got some customers and some revenue coming through.
Yep.
And just do a bit of research around that. I would suggest that as a fashion brand, you're probably, unless you've got a significant amount of technology in there, you're probably not the right kind of thing to go for venture capital. Venture capital firms these days seem to become increasingly focused just on technology, and they want the companies that are going to go like that. And that's what they're focused on. So I wouldn't, you can do a little bit of work around that, but I wouldn't spend too much time on that. I would try and focus more on finding high net worth individuals who operate as angel investors. Elaine put up a note. I don't know if they have this in Ukraine, but crowdfunding could be a route to go down. I don't know if you're familiar with crowdfunding.
Yeah, I heard, but I never did it.
Sure, understand. So that could be an interesting route to go down, because there you're accessing a wider range of ordinary people oftentimes. An ideal kind of person would be someone who's already made money in the fashion industry. So they know the industry, they know the challenges. They'll come in and they'll be able to guide you, not just in terms of having money, but having been there and done it themselves. And they'll be able to open up their book of contacts. They can introduce you to people that you might only have ever dreamed of meeting. So I would suggest for a business like yours, I would focus on finding some high net worth individuals. And if you can find someone who's built a fashion brand and sold it, and so they've got money and they've got the experience, that would be a fantastic. Where are you based?
Now I am in London. Yeah.
You're in London. Okay.
Yeah.
Okay. So if you Google angel investment networks in London, and you'll get a list of them, and then go in and have a look, and oftentimes they'll have a website you can go in and research. The key thing with angel investment networks is they often have one person who acts as a gatekeeper. And so this is the person, this person is the only access that you'll have until you get through them. So imagine like a gate, right? And they're holding the gate, and you don't get inside the gate unless you can get through them. So
it sounds like a game.
Exactly. So if you can find out who they are and establish a relationship with them and tell them what you're doing and why you're interested in them, and what is it that their angel network needs in order for you to have the opportunity to get through. And if you don't know these people, go onto LinkedIn or reach out to your community of contacts and see if you know anyone who knows them. Or just reach out to them on LinkedIn and say, you know, hi, my name's Tamar. This is my business. I'd love to talk to you, and see how they respond. Some people are very open to it, others less so. But as with anything, until you try, you don't know. In addition,
thank you very much.
In London, there are often meetup events, and there are often events where companies can go and pitch, and you can buy a ticket. And again, they're not, that you can buy a ticket for 25, 30, 50 pounds, so not a huge amount of money. And just go along to the event and see who else is there. And sometimes you'll find there an entrepreneur who's successfully raised money, and you can have a chat with them and say, well, tell me a bit more about your story. How did you learn? How did you get what you got? Is there someone, is there some way you can help me? Is there someone you can introduce me to?
Just to add on to that point as well, for me with those meetup groups, it's always been the most unexpected ones which have had the best results. So ones where I've had very little expectation of getting anything out of it, where I've met someone completely random by chance, and it's turned into something very interesting. So I would say keep an open mind when going to some of these events, even if it's something where you think, okay, I've got some free time, I could go to this, but is it worth it? I would say just take any opportunity. So if you increase the number of those opportunities you go to, the more likely you are to have those random encounters, which are arguably sort of the most important.
And the real value of those kind of networking events isn't necessarily, oh, I've met Daniel. It's, I've met Daniel and I've told Daniel what I'm looking for, and Daniel goes out to his network and says, hey, you should meet David, and makes an introduction. That's where the real value comes from these things. I'm just going to, Tamar, I'll come back to your other questions, but I just want to take what we talked about there and just apply that to Valentina. So Valentina, in your business, which is a tech business, so what you want to do is find some venture capital firms that invest in companies that are like yours. So whatever particular sector is, and you can go and you can Google them and say venture capital firms that invest in whatever it is. And then go onto their websites. Now, sometimes the VC firms don't have very good websites. There's a landing page and there's a login button for their investors, and there's nothing else, which is annoying. But increasingly, they are starting to show more. So they'll show, these are the companies we've invested in. These are the exits. These are our people. So have a look at the companies that they've invested in. And if you find something that sounds, kind of similar or interesting, reach out to the founder of that company, and you'll have their details and contacts from their website. Reach out to them and say, hey, Daniel, I saw your details on ABC Capital's website. I see that they've invested in your business. I'm a founder of a business that does XYZ, and really interested to see your story. And I wonder if we could meet, and I'll take you out for a coffee, and let's have a, please share with me, what's it been like for you? What's the experience been like? And that does two things. Number one, it helps you learn the journey that an entrepreneur who's been funded has been on. Number two, and this is the even more important one, if you build a relationship with them, then when you're ready, you can say to them, to the other founder, you can say, hey, would you introduce me to the investment manager or the partner or whoever? Would you introduce me to someone in the fund? Because the best way by a long margin of securing funding, of even getting a pitch opportunity, is a warm introduction.
Yes.
Okay,
yes.
let's go back to Tamar. You had some smaller questions as well.
Yeah, I had the smaller questions regarding the first, you said first pitch is just an opening, you shortly just describe in 8-10 slides actually 12. What it is all about. And 12, okay. Yeah, 12. I wrote it down as 12, not 8. And what is you said, and then it would be like a second meeting, from your experience, how many meetings that could be before any I don't know, decisions could be done, and what could be the second pitch deck, or it's not that important. Like, okay, it is important, but I mean, it's like whatever potential investor requires, we just prepare it, like extend it. Yeah, or what?
Yeah. So don't be surprised if you end up having 3, 4, 5 meetings before you get to a term sheet. And again, if you go into each meeting thinking my goal is to get invited to the next meeting.
Mm-hmm.
So you don't go into that first meeting thinking, right, I've got to pitch everything and I want to get the investment now, because you're not going to. What you want from that first meeting is to work out, do I like you? Do you like me? Do we understand each other? Can we work together? Do you understand my business? Can you add value? And if the answer to those are all yes, then you want to be invited back. If the answer to those things are no, then you don't want to carry on, because the worst thing that could possibly happen is that you end up in a relationship with an investor that goes bad. And I've seen that a few times, and it's really unpleasant. So what would happen at the second meeting will depend on the investor. So if we take your business, the investor might say, well, look, I want you to bring to me a sample of 10 of your different designs, and let's drill into your designs at the next meeting. Where are you sourcing your fabrics from? Where are you doing, pardon me, where are you doing your manufacturing? Have you, are you actually designing and manufacturing?
Yeah. But
Yeah.
I mean, I'm designing, but manufacture, I outsource, like in Ukraine.
Right. Okay, perfect. So who are you, so it might be, well, tell me about your manufacturing partner. Who are you dealing with? What do you know about them? Where have you done things with them? What's been their track record? And yeah, it will depend from one investor to the next. So you never really know what they're going to want to look at in the next discussion. But if you're open-minded, and they'll tell you, and they'll say, look, I want to have another meeting. Please come back in 2 weeks' time, and we're going to talk about this and this and this. And so you prepare this and this and this.
Okay, thank you. One more question.
Sure.
Regarding financial forecast, as you said, for 5 years. I mean, from your experience, I mean, what is the time period of return on investments that investors are usually looking like at 3 years, 4 years, 1 year, 2 months?
Typically, most intelligent investors in early stage businesses are looking at 5 to 7 years.
Okay, great.
Obviously,
And
they'd like to get a return faster than that, but the 5 to 7 years is an entirely acceptable time horizon.
I had a quick question.
Yes.
I was wanted to find out, what are some of the biggest mistakes you've seen early stage entrepreneurs make when approaching investments? You mentioned a few of them before, but I just wanted to see if there's anything really pertinent that sticks out in your minds.
Yeah. So mistake number one is following the so-called spray and pray approach. Sending out your pitch deck to 500 people, and not doing your research. You're far better off to spend time researching and finding the investors that are right for you, because the way, particularly if you're in venture capital, it's a little different with angels because they're investing their own money, whereas venture capitalists are what's called institutional investors. They're professional managers of investments who have gone to other people like university endowment funds, pension funds, insurance companies, banks, and brought together a pool of capital that they then invest. And they will have agreements with the people that sourced their money that say, we will be investing in this type of business. And so if this type of business is your business, brilliant. And if this type of business is not your business, don't bother. So if they go out and they say, we are a firm that invests in B2B SaaS applications for enterprise customers, then Tamar, don't bother spending your time there because it'll be a complete waste of time. If they say we invest in medical technology and you're not in medical technology, don't bother, it'll be a complete waste of time. So find out what their investment thesis is, and if it fits with you, what your business is, then absolutely spend time researching them and try and find your way to get a human connection with someone inside that investment firm. Because again, a warm introduction is absolutely, and by a massive margin, the best way to get an opportunity to actually pitch to an investor. For example, when I was researching funded female founders, I spoke with the managing partner of a medium-sized venture capital firm here in London. And this was in 2021 when the market was still booming. And he told me that they had received 8,000 applications for funding, and they'd made 16 investments. So the reality is, if you follow the spray and pray approach, if you go and go onto all these websites and submit your deck and fill in the Google form and attach your deck, the reality is the most junior member of the team is going to look at your deck and you're going to get maybe 20 seconds of their time. And they're going to look at it and think, okay, is this deck worthy of me spending a minute looking at it or not? Because literally, 8,000 decks, that's 160 a week. That's 32 a day. So, the first cut, you're not going to get much time. So make sure that your deck is well structured, that it's attractive, and that if you follow the layout that I've given you, that gives you a good shot at getting it, because you've got your elevator pitch. So right up front, I can understand in a sentence or two, hey, this is what this business is. Is this a good fit? Yeah, great. That goes onto the pile that says, I'm going to look at it. And then all of the other ones go onto the pile that say, forget it. And then they'll go back and they'll take the pile that says, I'm going to look at it. And they might spend 5 minutes on it. And then they'll say, okay, is this worthy of me spending half an hour on or not? And if it's not, it goes in the bin. And if it is, then they'll spend half an hour on it. And if they still like it, they'll take it to their boss and say, hey, here's 3 decks that you should look at.
Great. We have a couple of minutes. I just wanted a bit more information about exit plan.
Okay.
You said this is the information when you need to kind of point out how much you want, what is the time period, how they can get their money, and what will be. The question is there are different type of businesses. There are businesses where, for example, the founder cannot kind of exit in 5 years or 7 years, and there are type of businesses where it's founder should be there, otherwise it's not working, like a personal fashion brand, like in this case. I assume it's less attractive probably for the investors, or how. Just a few tokens. I don't have an exact question. I just never did it before, so I was thinking.
So what's your plan? Let's say you've set out this business plan over a 5-year period. You've hit all your targets. What do you want to do? Do you want to stay in the business? Do you want to sell it? Do you want to buy out the investor from the money you've made? What's your plan? Because that's a very personal thing to do. If this becomes a fashion brand that revolves around you and your name, then you're going to probably want to stay with it. But the investor might say, well, look, especially if you're dealing with angels and things like that, they're very early stage investors. And once a business is up and running and off the ground, they're often, very happy for you to carry on, but buy me out or find someone else to buy my stake, because I like the buzz of starting things. I'm not so good at growing businesses. It depends on the individual investor.
Okay. Yeah.
But do what's right for you as the founder.
Okay, yeah, I need to think about that because it's like important to understand when you go to the investor.
Exactly.
Yeah, like everything sounds simple, but it's not, I know. Even starting from the first slide and elevator pitch, how to make it, attractive and eye-catching and etc. But yeah, thank you very much.
Imagine your best friend has just come over and you haven't seen her for 6 months, and she says, "Hey, tell me about your business. I know you've been working on it." What's the first thing you're going to say to your best friend?
Yep.
And that's your elevator pitch.
Also, I want to.
You've been working.
Sorry, no, I just wanted to say for anyone who's either on the call now or watching this, if you have a pitch deck that you want some checks over or just had initial thoughts, then please feel free to send it to either myself and or Elaine, and we can have a look. So that invitation is open to anyone. Sorry, Tamara, you were saying.
Okay.
Yeah. Nice. Yeah, thank you. That's a good idea. Yeah, I wanted to ask regarding, like, we started from the female and the male story. Hi, hello. Oh, we have a new team member. What is you've been working with the female entrepreneurs and the male entrepreneurs? What is the main difference for you? Like, why you think there are so few females than males in the business overall? It's just
that's such a big question. So I think in terms of why are there fewer female entrepreneurs, or why are they not getting the funding?
It's it's like a funnel. There are few and they are getting less funding.
Okay, so the biggest barrier in terms of getting the funding, the biggest barrier is just gender bias, inherent bias. Often it's unconscious bias, and oftentimes it comes in. When I was researching the book, I did a lot of work around bias. I have a friend who is a professor of cognitive bias at University College London, and I reviewed some of his research and interviewed him. But I also looked at various statistics about the gender makeup of the investment industry, where there are very, very few women in senior roles. There are still more than half. This is data that's now 18 months old, but there was more than half of the venture capital firms in the UK in 2021 did not have a woman on their investment committee. So there's that huge imbalance. I think as well, you've got biology. Women have babies, and that takes them away from the workforce, and that takes them away from their businesses. Apart from that, I think it's changing, but historically, when people had families, it was the woman that stayed at home, and that kept her out of the workforce, and then she went back later and was 5 years behind where the world had moved on, and it took her time to catch up. I think some of the other key factors, again, on the bias, I read a fascinating study by Lego, the little toy brick company, and they were looking at the playing habits of children between the age of 6 months and 6 years. And they found that up to about the age of 2, little boys and little girls didn't show any kind of gender bias. But from the age of 2, little girls started playing with dolls and houses, and little boys started playing with trucks and construction and things like that. Now, where is that coming from? That must be coming from the parents, because up until the age of 2, the kids weren't showing that. And then all of a sudden that started to change. So I think there's a generational or multi-generational change that's going to keep coming. I think a lot of the things that are happening in the world around better gender equality are improving significantly, but it's, you know, we've still got a long way to go.
I was just back from a roundtable discussion in Westminster lunchtime today, so I was a bit late just on this topic. And we had one of the ministers from the business and trade department there. And as you've said, David, I mean, there are so many different factors involved in all of this. And
Yeah.
we really need a really holistic solution. And it's about sort of systems and processes and policies that help as well, whether it's
Yeah.
childcare, you know, caring
Exactly.
elderly parents, all of that. It's
Exactly.
so many things coming together. But
Exactly.
you know, I mean, I've been banging away on this for 30 years now, and
Yeah.
I can see some progress, but we've certainly got ways to go. But
Yeah.
I was encouraged today, I have to say.
Good, good.
I was encouraged.
Now, I want to, Elaine, I want to make you an offer. This has been great. I've really enjoyed it. I am so supportive of what you're doing to help
I know.
Ukrainian women, and I think it's
Yeah.
absolutely fantastic because, yeah, well, don't even get me started on the whole war thing, but it's horrendous. So I'm delighted to be here. What I would like to offer is I'm happy to give a copy of my book to everybody who's on your program, but if you can ship them, I can get them to you, and then you can ship them. If that helps, I'd be delighted to do that.
Well, we can certainly make that offer available to our participants, and
Sure.
and that will be great, David. We can really do that, and we can, you know, after the call, we can follow up on that. Daniel and I, we're having a review. This is the end of the
Yes.
first cohort of this.
Yeah,
this
and you got another
program.
one coming
We've
through.
got a break coming in September.
Yeah,
but
Yeah,
we're not going
but
to.
no, I'd love to help.
We're not going to lose people like Tamer and Valentina. You know, they're going to stick with us on our community, and we'll stay in touch and share this there. So let's have a discussion after this and see how we can do that, David. But we really appreciate all your support. You've been a great supporter of us over recent years in Global Entrepreneurship Week, and yeah, I know you're very passionate about supporting female founders, so
Yeah.
thank you for that.
Thank
My
you.
pleasure.
Great. So I'll end the recording, and I'll put this up online so anyone can watch this. But yeah, thank you so much, David. And yeah, tomorrow I'll let you know. Also, everything will be on the group, and then I'll let you know as well if you want to join the next cohort. So we'll have some different resources, and things might look a bit different. So I'm sure there'll be a lot of use there as well.
Yeah.
Yeah,
But
definitely.
massive good luck on your shop, and if
Yeah,
there's any support,
great, very
any
exciting.
any elevator pictures or anything that you'd like us to have a look at,
Okay.
please don't hesitate to contact.
Yeah, great.
I will. Thank you very much. I
Right.
mean, it's such a like a responsibility for me to speak like alone for everyone. But really, thank you for everything you do. I mean, it's really it's tremendous, and it's very human, and it's very touchy, and yeah, it will pay off for everyone. I think you're inspiring us with all this your initiatives, and thank you, Lena. Thank you, everyone, like for your help. Yeah.
Our pleasure.
All right.
Right. Thanks,
Have a good
everyone.
evening.
Okay.
Bye.
Bye, bye,
Thank
bye.
you. Okay.
Cheerio.
Bye bye.